We detected an unusual trade on Tesla stock, ticker symbol TSLA, that suggests that the stock could potentially crash down after earnings, which is being reported in a few days on January 29th. And so in this video, we will analyze this unusual option activity to find out how this investor or potential insider is shorting Tesla stock right before earnings. Because as we all know, the rich have more access to information, including leaked insider information such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis. Now, if you've been following our channel, you know that on this day here, where this red trend line ends, was when we shared our last Tesla video over here, where we analyzed a $241 million trade. And you can see that the stock clearly continued to soar higher as we had predicted 2 months ago. And so we made even more than 330% profit on our last Tesla trade. So if you missed this video, we'll put a link at the top here. Make sure to watch it to learn more on how we are able to achieve very high profits. And make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now let's take a deeper look at the data from the last trading day on January 24th. We can see here from the options time and sales tape that we had 15,650 contracts for these February 21st options at the 215 strike puts on January 24th at about 12:35. But notice at 12:19, we also had these same options being traded, 3,000 more. And we can see the price they paid, about $30 for each of these put options. And so we can calculate the estimated trade costs here, 15,650 plus the 3,000 contracts, multiplied by the $30 each, and we get $559,000. So $500,000, definitely not as much as our last Tesla analysis, which is why it is a higher risk trade in comparison to the trades that we share on our website. If you are interested in the lower risk, not earnings trades, because keep in mind, earnings is coming up, so this also elevates the level of risk, then go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link at the top here where you can also gain access to option strategies and our stop losses if you only trade stocks to reduce risk while increasing the probability of profit. Now, even though this is a higher risk trade, you can see here that we also traded this because it is still very unusual for these February 21st options at the 215 strike puts. You can see here there was a total volume of 22,000 being traded. Clearly new opening trade since the open interest was only 2,262. And you can see our position here. POS stands for position. Green means buy. Where we also bought these for the $30 that we had just calculated earlier. And so when we analyze this trade, we can see here on the risk profile profit loss graph that this is clearly a bearish trade because the x-axis, which represents the share price of Tesla here, y-axis is the profit loss. Note the zero break even over here. And so when the lines are below it, it is a loss. And if it's above it, it is a gain. So as Tesla stock, which is trading right over here, goes down, this becomes very profitable. And you can see that this profit potential is very high in relation to the initial cost of this trade per contract. And if it goes up, it is a negative loss. So keep that in mind. These put options are very out the money. They were at $215 strike price puts, nearly half the current share price now. And so the likelihood of this dropping down to $215 a share is very unlikely. These are very way out the money put options. But notice that it does not necessarily have to go to $215. If it starts to go down after earnings, it already becomes a positive profit. You can see at $368 a share, it is already a profit of $60. That's a 200% profit since these put options cost $30. And so it is also very possible that these put options are hedges for earnings to protect the investor's shares where they have a long position. And so keep that in mind. It is also a very unusual trade to be spending $500,000 in put options that are way out the money with a low probability of profit. And so if you want higher chance of profit trades with a lower risk, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. Do you think Tesla stock will crash down after earnings? And if you want to learn more about our work, watch our last Tesla video. We'll put a link over here. As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.